Welcome back to my channel. Today's September 9th, 2025. For some of you that may not know, I am an IRS enrolled agent. I've been practicing and preparing tax returns for the public for about 20 years or so. And I have many clients that have had a lot of issues over the years. I was preparing taxes before, during, and after the last financial crisis in 2008. I got to see everything unravel, the devastation, the people that lost their homes, people that had bankruptcies, and a lot of different very, very sad stories. But I also got to see a lot of people that eventually did recover from this financial crisis. A lot of people were able to buy homes. They were able to get back on their feet, build equity again. So today's story is going to be about a client that I recently encountered this past year. This person is a realtor. Now, as all of you may know, realtors, their income fluctuates. Not every single year is the same. There's years that realtors have fantastic income, and there's years that they have very little income. I have many clients that are in this industry, and a lot of them, when they make a lot of money, they splurge. A lot of them cannot control their spending. They're out there spending their money on retail therapy. They're out there taking these really expensive trips. They're out there buying these multi-million-dollar homes, just like this client that I have. This client recently, in 2023, decided to splurge on a $1.5 million home. Now, fast forward to 2025, here we are. The client found me through a referral. In my particular case, I don't do any advertising for my services. I do run a small ad in a senior community near where I live. But other than that, most of my clientele is through word of mouth. So this person was referred to me, and it just so happens that we needed to file 3 years of tax returns for this individual. So usually I always ask people, especially when they're self-employed, to be able to give me documentation or a list of expenses of all of the ordinary and necessary expenses tied to their business. Once I went ahead and started preparing their tax returns, lo and behold, I found out, due to the fact that this person had an office and home, they were delinquent on $35,000 of property taxes to the county. 2 years of property taxes, and the home was just recently purchased 2 years ago. How was this home purchased? Well, it just so happens that this person, again, got a windfall of commissions throughout 2021 and 2022. And you could see that their income started dwindling in 2023, 2024, and recently their income is at 0 for 2025. You will be surprised the percentage of income drops that you see with these types of professions. A lot of us know that this type of profession is seasonal, has its ups and downs. My question to this client is, they have a mortgage where they're paying an absurd amount of interest as well. It's very difficult to maintain a property that size because the utilities are sky high. So not only does she have to worry about all the repairs, because the home is over 5,000 square feet, we have to worry about the utilities, property taxes, the insurance, which is also insane. Here in California, everything is just so expensive. So this is a story. Imagine, realtors are supposed to be the experts when it comes to property. And yet we have many of them falling in that same trap, purchasing property that they cannot afford. Just because the bank tells you that you can afford it somehow and you're able to get a loan doesn't mean that you should go out there purchasing property that's beyond your limit. Now, what does this mean for the housing market? What does this mean for you as the regular consumer? How can we as individuals learn from these types of mistakes? Now, what happens when you fall behind on your property taxes? I will go ahead and break that down for you today. Now, this person's problems go way beyond not having any income as a realtor and not able to find another employment. Unfortunately, we live in a world, if you are over 55 years old, sometimes it can get a little bit more difficult to be able to find a good paying job. You have to have a lot of experience and knowledge, and even then, in today's economy, it's getting rougher to be able to find good employment. But this person should be worried about the county coming after their property and putting in these large liens against their property, even if their mortgage is paid up to date. So what usually happens? Well, a lot of the times the county is priority to be able to get paid. And these counties, they usually don't forgive penalties for paying late. They will continue charging penalties and interest as the months go by. And within 3 to 5 years or so, you could be in a situation where your property could be sold off to be able to pay off those tax liens. So you think the bank cares? The bank does not care if you are actually current on your mortgage. A lot of these times, especially when you have large balances like that, they get tougher and tougher to manage. In this particular case, we got $35,000 of unpaid tax debt. Another year rolls by, and that's probably going to be closer to $50,000. And before you know it, it's going to get to a point where this person won't know what to do. They're just going to have to let the property go over time, or they're going to have to find some sort of loan shark. If they don't have any avenues, they're going to have to try to reach someone that actually has a good amount of money to be able to purchase that property and pay off that tax lien. Now, what does this say about the housing market? Realtors are supposed to be the experts. And here we have several realtors, not just this one, that are under in a similar boat. I can guarantee it. And I've seen it firsthand over the last several years, people purchasing way too much home that they cannot afford. So what does this say? The commissions are starting to dwindle for a lot of these people. A lot of them did not save when the money was coming in. And now when everything's dried up, now it's even more difficult. And that just does not apply to real estate agents or people in that type of field. There's a lot of different professions that also depend on income that fluctuates on a yearly basis or on a monthly basis. Right now, we have a situation where a lot of homes aren't selling. A lot of people are having difficulty selling their property and having to slash prices to be able to get people's attention. Home sales are drying up, and the tax default lists are going to continue to grow as we enter into a different type of housing market. Layoffs are going to continue to grow in this economy. The commissions are going to get smaller. Inflation is ravaging people's households, and it's harder to be able to pull equity from your property to save you when things go wrong. My warning, do not overbuy. If you cannot properly afford the home, don't purchase too much home. Live modestly. I think it's very important that if you own a property, that you always keep a certain amount of money aside for a tax reserve, or even for HOA fees or insurance, because those things can fluctuate over the years. If you are self-employed or if your income fluctuates monthly, make sure that you prepare for those moments where your income might be less. You have to know how to adjust your income over the months or over the years so you don't fall in this trap. And also, if you're in a situation where you are starting to fall behind with your property taxes, reach out to your county to see if you can get into an installment plan or somehow so that you don't fall further behind like this person, where I'm pretty sure that they just ignored the tax bills. They didn't even bother to contact the county. We are in a situation where the housing market is getting stressed, and this is an indicator that things are going to get worse. I really do think that we are entering a different phase in the economy, and soon enough, we're going to be entering in a situation when more and more foreclosures are going to be happening. This is just one of the signs that's going to lead us there. When I see that realtors cannot keep up with their homes, then I know that a lot of people are over leveraging. So I think that you as an individual should stop over leveraging and start trying to save a little bit more cash for that rainy day. So this is just another warning for people out there to prepare, to pay attention to all these expenses. Also, another thing that I see people fall behind on are HOA fees. I have a property here in California that I am responsible for a monthly HOA. Every single year, they tend to go up a percentage. There's a lot of people complaining all the time about the HOAs and what they do and what value they provide. But unfortunately, that doesn't change the fact that you still have to pay those fees. And if you don't, you could be caught in a situation where you could also have your house forced to be sold to be able to cover those unpaid HOA fees. I hope you guys found this information useful. I know there's a lot of people out there in this situation. If you liked this video, please hit that like button, subscribe to my channel, it's free. You will be notified every time I release new content, and I will be sharing a lot of stories in the future because I have first glance at what people's economies are doing. Now, are you seeing more tax defaults where you live? Do you have neighbors going through similar situations or family members? Please comment down below. I would like to hear your stories. And I'm going to go ahead and continue on my day. This week has been extremely busy. I have that deadline on 9/15, which is right around the corner. I'm trying to do my best to be able to service the clients that I have right now. We're going to go ahead and provide good content that I think will make you guys a better person. We'll see you guys in the next one. Take care.